please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, good morning. Welcome to Morning Call. That drama will play out today. The Supreme Court will resume hearing at 10:30 a.m. But that's a separate issue. I think the markets are going to worry about something else altogether, which is also a combination of factors, and those are the macro factors that are kind of piling up against emerging markets and more particularly against India. That's the combo. Oil at 80, dollar at 93.5, and US 10-year yields now piercing 3.1 and going on to 3.12%. The backdrop of the US-China trade talks also not looking too good. Net, the SGX Nifty is somewhat telling the story. It's been telling the story badly in the past several weeks, but nevertheless it's indicating that several parts of the Indian market are going to feel the pinch. It's not very difficult to count what those sectors will be. I mean, you can on top of head say oil marketing companies and airlines and tires and paints, but really anything that's any good you're carrying is going to get expensive. And as the dollar gets stronger, the rupee becomes weaker. That also means a whole host of inputs get expensive. You just can't count when the rupee becomes cheap. Oh, it's a multifaceted impact. Companies with FCCB borrowings get impacted. Net, the macro situation needs time. Yes, growth is there. You know, why is oil so expensive? It's also because demand is good, and therefore growth is a big palliative. Our exports will improve, and domestic manufacturers are always better off during inflation, because from the time they produce to the time they sell, prices have risen. So it is also positive for manufacturing. The point is, will growth be good enough to beat the inflation pressure? That's the question that the market has to answer for us.
Okay. Hi Lata, good morning. Hi Anuj, morning. In a sense, fallen 1%, the Nifty that is. The mid-caps have fallen almost 2%, and I was looking at, the key contributors this week. Across the board, if you slice it, ICICI Bank, SBI, Reliance have all fallen about 3, 4, 5%. So there is pressure that's creeping into the markets, especially with respect to some of the large caps. Anuj, morning. Do you get a sense that, this level that we're seeing, of course, we've been toing and froing around this level, but in general, this 10,900 mark could prove to be a hurdle even today?
Morning, Sonia. First of all, from that, montage that we were saying, the last bit, it was pretty rich of Yashwant Sinha to say that. But anyway, we will, of course, we can discuss that later. I'll make a point here. For 3 days, I've been saying that this market has not topped out and is now sell-on rally. I think the viewers and those following me on Twitter would know that. But now this market is oversold in the near term, and today is not a good day to take short, especially in the first trade, because if the SGX Nifty is right and if we get a gap down, just for today, and in the first half, there's a probability and high probability of a short covering bounce. So today in the first half, the trade is for let everyone be short, because now there's,
consensus short.
Exactly. And, everyone's talking about crude, everyone's talking about politics, everyone's talking about negatives. Perfect time for market to show a bounce. But that bounce can get sold into. So today the market is going to trap, my sense is, people on both sides. First, this market might trap the shorts, and then in the second half, the market might trap the longs. There's a 20-day moving average of 10,685. That's where the Nifty is now. So that's the zone. If a bounce has to happen, it has to happen here. Otherwise, the 10,601 series low, that's sacrosanct. Again, not a call for today, but it's now logical for the Bank Nifty. As I've been saying, a 1,000-point decline is possible. We've seen almost 70% of that play out. A move towards 25,700 is now possible on the Bank Nifty. And again, just for today, the mid caps could do well, because if you see the high to low ratio, that improved quite significantly yesterday. And for me, that's important. Yesterday we made this point. From 48, the highs went to 52. More importantly, the lows came down from 313 to 217. So nearly 100 stocks managed to bounce back from 52-week lows. That could be an interesting bit. So could be a volatile day with both way moves possible in today's trade. And I'll just make one point on a lighter note, since it's Friday. Bajaj Finance saw delivery buying of 350 crores yesterday, and the stock was up 8% at a new all-time high. As Vidya Balan said in the dirty picture, pictures सिर्फ 3 वजह से चलती हैं: entertainment, entertainment, entertainment. Replace entertainment with earnings and picture with stocks. In the long term, stocks will rise.
No, I take your point entirely. That's why I said growth can actually be a very big palliative, and in a rising inflation scenario, companies are better off. I mean, what was the West crying about? Deflation. So inflation actually, in a sense, is positive for manufacturing. But that apart, you know, I take your point even on mid-cap stocks today. See, yesterday, because of Bajaj Finance, we saw a whole host of NBFCs, Cholamandalam, L&T Finance, all of them, you know, rise in that because these companies are able to make a space for themselves in spite of higher interest rates. They've been able to choose niches where they're been able to pass on their costs, and that will be true today as well. And likewise, the PSU banks were doing well because of expectations that Piyush Goyal and RBI will come out with some kind of a formula. Today there is talk that RBI may relax the PCA norms. It may do none of those, but the talk is enough to keep the PSU banks cheered. But my worry is also that in this, you know, recovery that you see in mid-caps or whatever, mild bounce back, look at the cats and dogs that ran yesterday. So many power companies. I mean, things are not going good for them. So, you know, it's also a recovery to beware of, to be cautious about.
Yeah, you know, spare a moment to enjoy that that analogy to the movie that Anuj made, right? I think he's in Friday mood. He's making his plans ready. But by the way, talking about Bajaj Finance, you know, Bajaj FinServ also came out with a very good set of numbers post market hours, and apparently in the Bajaj Finance conference call, I didn't hear it myself, but some reports indicated that the management was extremely optimistic on the future of the company.
You know, if you go by the previous rate cycle, for now, NBFCs, which were raising money at 7 and 7.5%, are today raising money at 9% plus. I mean, DHFL is giving a 1% bonus as well if you stay with them, if you buy and hold. So, you know, you're raising money at 9 and 10%. In the previous rung, NBFC started losing money only when they went up to 13%. So it's quite possible that at 10 you raise and you're able to manage lending at 11.
Okay, so there's definitely positives even though the overall macro situation is negative. We've had some good numbers also from smaller companies like KEI, SRF, etc. We'll talk about all that and tell you what's up this Friday morning. Let's take a look first up at what our wise experts have to say as we head into trade today. Rhythm Desai of Morgan Stanley says Q4 FY18 earnings season is turning out to be weaker on the net profit growth versus Morgan Stanley analyst expectations. He says there is disappointment seen mostly in banks, telecom and industrial sectors, but revenue growth trajectory remains quite strong.
Okay, and it's Friday, so there's a word from Christopher Wood as well. Chris Wood of CLSA says, if state elections influence sentiment in the short term, Greed and Fear's view remains that it is premature to focus on Indian politics before the fourth quarter, with the general election not due to be held until April-May next year. He says Greed and Fear's base case remains that Narendra Modi and BJP will win again, albeit probably with a reduced majority. Some of the positive consequences of his policies should then be clear at the ground level after the initial dislocation caused by demonetization and the introduction of GST. So basically, overall, Greed and Fear still positive.
Yes, quite optimistic. Although when we spoke to Mahesh Nandurkar, he was a bit cautious on the overall macro situation. But they're positive as far as politics is concerned. Let's get you some money market news as well this morning. We have Bhaskar Panda of HDFC Bank who says global oil prices are on a one-way street. He says Brent crude is past the $80 mark now. The US 10-year yield also has scaled a new 7-year high. And to top it all, the dollar index is becoming stronger. He says this dangerous cocktail is impacting the dollar-INR pair. He says the pressure on the rupee may continue for the time being. Hence, he expects the pair to remain in a volatile range of 67.75 to 68.05.
Okay, Bhaskar Panda on the 10-year benchmark bond yield says the yield is consolidating. Gradually, he says it could move towards the 8% mark as global cues push inflation beyond expectations and give rise to the possibility of a rate hike.
Okay, let's talk about the global cues then. Here's Nigel with the world view.
Well, not too great cues coming in from the US markets. All the three frontline indices, they ended in the red. The Dow, in fact, ended with a cut of around 50 points because a couple of stocks are struggling out there. We saw Walmart did see some selling pressure. Even Cisco was a loser. So from the Dow, those were the big losers in yesterday's trading session. But importantly, US and China, the second round of trade talks does kickstart. And in fact, Donald Trump, he spoiled the party this time around. He said, will it be successful? And he's doubting that. So on the back of that, you know, there was fears that trade wars could return. On the back of that, we did see some selling in yesterday's trading session. But the biggest fear really has been the surging bond yields. We have been talking about the 10-year yield. Well, just take a look at the 2-year yield. That's at the highest since 2008. The 10 years at the highest in 2011, and even the 20-year yield, in fact, has seen a big spike. So yields go up, not good news for equity markets. The European markets, though, they ended more or less in the green in yesterday's trading session. All the three frontliners, they in fact ended in the green. That's because, in fact, we did see one of those stocks out there, Ocado, that's the British online supermarket, that signed a deal with Kroger. So that stock, in fact, was up more than 40% in trade yesterday. Brent crude continues to be in focus. It's helping oil and gas stocks globally. And yesterday as well, it did breach that 80-odd mark for the first time in the last 3 years. Seems like a bit of risk-off playing out, though. A couple of those emerging markets ended with cuts of around 3%. In fact, the Brazilian index was down. The Japanese index was holding mildly in the green the last time I checked. We are seeing weakness on the yen. Good news for them. While other markets, more or less flattish, is what we did see. The SGX Nifty as well was indicating a bit of a soft start. Let's see whether or not we start off with the cut of around 25 points. Back to you.
Thanks a lot for that, Nigel. But they've recovered. I mean, there's a shade of green in the Straits and the Kospi. So perhaps not a bad start after all from Asia. Well, oil remains the big talking point for our market. Yesterday, I spoke with Amrita Sen of Energy Aspects and Pranjal Bhandari of HSBC India. Amrita Sen, more important, two key takeaways. They had expected oil to touch 100 next year. Now they are advancing it to sometime this year. But obviously, it's not a straight line. The other key takeaway is from now to December, the average for crude could well be $80. So let's prepare for that. Not looking too bad, but not looking too good either. Here's what they had to tell us. We are back after a break.
The markets are tighter. OECD inventories are now below the 5-year average. We have always had a price spike in our forecast for the last 2 to 3 years. We've always said that late 2018, early 2019, we are likely to go to $100 because of underinvestment. That's the other thing that you're seeing right now. Just supplies are falling everywhere other than the US. And of course, the Iran situation has just brought forward our forecast. Our forecast has been $100 for next year. And now, of course, we're seeing the likelihood that we could touch that this year.
Oil is a very important mover for India's macroeconomy, but this time it's not just oil, it's a lot of other things. It's, a reversal in oil prices, it's a reversal in the government's policy. A government which has kept MSP prices low for 4 years is finally raising them. Output gap is closing now, which hadn't happened for the last couple of years. The trade deficit is widening now, which hadn't happened for the last many years. So a lot of things are coming together. Our own analysis suggests that if a global oil rises by $10 and all of it is put, the burden is put on fiscal, basically say by cutting the excise taxes, it could increase the fiscal deficit by 0.3% of GDP.
Analyzing all the cues as we head into trade this morning, most of Asia is actually mixed. China is slightly subdued. Remember, the US-China trade talks have now begun. There are tough negotiations underway. But many experts believe that there is a scope for compromise as well. But let's get our research team to tell us how to approach our own trade this morning, considering we've fallen almost 1% through the course of the week. Anuj, what are you looking at today? So,
Sonia, my basic sense is today there could be some bit of rally, and especially in the mid-caps, because they've been beaten down a lot. JSW Steel, yesterday my thought process was that it will fall after numbers, and I think that happened. But the numbers were good and the cycle is still intact. So long unwinding is done. Now there's a good chance that the stock bounces from the 20-day moving average. And M&M Financials, there was a big NBFC party yesterday. M&M Financials has corrected a lot, and it bounced from 200-day moving average, and there was quite a bit of delivery buying. So the risk reward looked favorable over there. So I'll watch out for if there's any kind of follow through in this one.
Okay. Well, drug companies and US FDA observations. This time, not US FDA, but drug authority observations for Biocon.
Well, it is the US FDA observations for Biocon, Lata. The 7 observations issued to their Bangalore facility have now become public. And obviously, you expect a sentiment negative on the company, on the stock, simply because there is uncertainty ahead of how those observations would be solved by Biocon. Remember that it is likely for their biosimilar application, pegfilgrastim, which the US FDA is expected to consider by the 4th of June of this year. So it is definitely going to be a sentiment negative, likely to be procedural as per the company. Not likely actually, the company has said they are procedural.
Okay, Ekta, thanks a lot for that. That's Biocon, of course. But what about Sun Pharma?
Well, Taro numbers are actually better than expectations. So the revenue has declined around 11%, margins have come in at around 42%, and profit has grown because of a lower tax rate. So the street will be enthused with the fact that at least the numbers are not as drastically low as the street was anticipating, and hence green on the stock. Also, they have launched the authorized generic version of cholesterol drug Welchol in the US, so they could likely make around $10 to $15 million from that particular drug.
Okay, thanks a lot for that. We'll watch out for these names. But as we were telling you, the NBFCs have done pretty well this quarter. Bajaj Finserv is on our radar. Abhishek, how did it look?
Well, Sonia, they have reported a very strong set of numbers when it comes to the top line. So top line growth was largely aided by the insurance business, wherein sequential growth was pretty strong. The general insurance premium grew by 46%, while life insurance premium grew by 54%, largely driven by first year premium, which grew by 88% YOY and about 48% sequentially. The consolidated PAT, however, was led by Bajaj Finance, as insurance PAT was on the lower side. So total income grew by 25% plus YOY and about 15% sequentially. The profits were aided by Bajaj Finance. They grew by 38% YOY, declined by 8.5% because insurance premium declined by 16% sequentially. Back to you.
Okay. Well, thanks for that, Abhishek. It's a blazing summer, Anisha, and still Voltas, the traditional AC company, didn't make much money?
Well, yes, it looks like the unseasonal rains that we saw in the north part of the country is what really made their AC sales go lower. And it was a bit of disappointing quarter when it comes to the AC business, because on a reported basis, the revenue has declined as far as the UCP segment is concerned. Even if you strip off the excise adjustment, the growth is around 6 to 7% versus an expected growth of a double-digit growth that we expect in the AC business. Now, MEP segment is what really saved their face, because the margins there have been better, and that's the reason that the overall margin picture is looking all right, but the AC picture really disappointed. They've even lost market share, because end of Q4 they announced that their market share is 22%. At the end of Q3 they had said it is 23.7%. So losing 170 basis points in one quarter itself would not go down well with seat. CLSA, for example, says that their theory of peaking market share is what played out, and they see it as a de-rating catalyst. On the other side, Jefferies sees the weakness as a buying opportunity. They have a target price over 200 rupees in the current market price. Let's see how this plays out.
Okay, Anisha, thanks a lot for that. Tire companies have delivered good earnings, and JK Tire as well.
Yes, in fact, this time the operational performance has been quite good. As we've been saying repeatedly, despite higher crude prices, the companies have had the ability to pass it on to consumers. This time, the India business margins have improved substantially. So the consolidated revenues have gone up about 7.5%. The margins have gone up 540 basis points on a year-on-year basis. And the India business EBIT particularly has gone up quite a bit, 2.5 times year-on-year. Of course, it came on a really low base as well. Same time last year was very weak for them. The Mexican business Tornel continues to remain under pressure, so the revenues and the EBIT over there was lower on a year-on-year basis. But I guess the fact that the India business has done well and better than some of its peers is something the street will like.
Okay, so still able to pass on costs. Yes. That's very clear. KEI Industries stood out, didn't it, Anisha?
Oh, well, yes, a very strong and impressive quarter coming in from KEI Industries, and the growth was led by the top line itself, because that grew by around 30%. The margins also expanded a bit, 9.8% versus 9% that they reported last year, very close to what the estimates were. And the bottom line also came ahead of estimates. For example, Edelweiss was estimating a profit of 37 crores. They have delivered a profit of around 50 crores. Separately, they have also announced some capacity expansion of just around 30 to 35 crores that can add 200 crores to the revenue. So that should also go down well with the street.
Okay. Well, thanks for that. Now, from one good result to one bad. Central Bank, Abhishek.
Well, Lata, nothing different from what other PSU banks are reporting. So, Central Bank actually reported the highest net loss in a quarter at about 2,100 crore. So, for the last 10 quarters, they have now reported a net loss of close to 9,300 crores. So, gross NPA in absolute value has increased by 17.5%. Gross NPA ratio is at 21.5 versus 18.1. For FY17, they saw a gross NPA divergence of close to 1,660 crores, which formed about 0.9% of the then book. Balance sheet declines continues, or the shrinkage continues. Deposits degrew by 1.5% and loan book declined by 14.5%. Back to you.
Okay, Abhishek, thanks a lot for that. What about some other stocks in news? Anisha has that list.
Well, yes, Anuj, I'll start with HCC. Now, that stock was up around 7-8% in trade yesterday, and now we know why. Because they had a con call yesterday with RJ-led Rare Enterprises, so that was in focus and maybe will remain in focus today as well. Moving on to Fortis, where they have received a letter from IHH for extension of acceptance period. Now, that is something that has been an ongoing story with Fortis. Let's see how that one reacts today. JK Paper, the Committee of Creditors has approved the resolution plan that was submitted for insolvency resolution of the Sirpur Paper Mills Limited, so that might see a green tick as well. Moving on to Godrej Agrovet, wherein the company's subsidiary, which is Creamline Dairy, has decided to invest 400 crores in a greenfield milk processing unit, so that should see some green tick as well. Lastly, on JP Infratech and JP Associates, remember in an important case, JP Infratech has got back 858 acres of land that was mortgaged to the lenders of Jaiprakash Associates. So not too much of a good news coming in for the lenders of Jaiprakash Associates, but good news for JP Infratech because their liquidation value goes up around 2,000 to 3,000 crore rupees. Back to you.
Okay, thanks a lot for that.
One pocket to another.
Yeah.
I don't see how anyone benefits much.
Okay, well, today is a big day of earnings. You have lots of numbers coming out. There's Ashok Leyland, Bajaj Auto, Thermax, etc. But let's talk about some other results that came in post-market hours. Sonal, tell us.
I'll start with Quest Corp. Very strong set of numbers. The revenue went up by 52.5%. Even profit, they saw growth of around 127%. Expect the stock to be in green today. Coffee Day, another good set of numbers. The margins, they expanded by 175 basis points to 15.75%. Profit growth was at around 7.5%. But same-store sales growth came in at 8.2%, which is highest in last 5 quarters. SRF, the chemical maker, beat on all parameters actually. Revenue up 22%, EBITDA up 19%. However, profits were down due to a tax expense, but expect the stock to be in green today. Man Infra, another good set of numbers. EBITDA went up by 70%, so did the profits. Expect all these stocks to be in green today.